Hello, thanks for joining me again. This is the US Futures weekly chart analysis for the week ending 2nd of September 2022. The first chart is the US Dollar Index futures, and the US Dollar Index futures have broken out further this week. You can see that over the last 2 weeks, price has tested for supply below the previous bar's close for a period of the week before pushing higher in the end. The volume this week was reduced, even though price moved higher, and that shows that selling pressure was reduced this week. There was less selling pressure in the market, and that allowed price to push higher with relative ease. And it also shows that when price tested for supply, not very much supply was drawn out. You can see prices broken out above the recent consolidation period here, as it did previously, where price consolidated, pushed up to the line, and then accelerated higher in the past. When the US dollar accelerates higher like this, when it really surges higher, as it has done over the past 3 weeks, it really puts the associated markets under some pressure. That is, commodity markets that are priced in US dollars, and also currency markets where the US dollar is the counterparty. If price is just creeping higher steadily, then those associated markets can absorb to some extent the extra strength in the US dollar. But when the US dollar surges higher with real vigor, they can't absorb that increase so easily and find themselves pushed lower in response. And then when there's a subsequent consolidation period like this, or perhaps when it goes sideways like this or like this, it gives those associated markets some chance to catch up and regain some of the lost ground when price was surging higher on the US dollar. So as you'll see in a number of the charts today, the US dollar has surged higher over the past 3 weeks, and that's put a lot of the associated markets under pressure. The next chart is the E-mini. It's the S&P 500 index futures, which closed lower this week on an increase in volume, but not an increase in spread. So there may have been some buying in this bar, or an attempt. You can see in the background here, you've got a consolidation and probably some buying back here. That means that there's some support or previous support at this level on the chart. And in response, price pushed higher. There was always going to be some supply drawn out to the left here, and that, along with the strength in the US dollar over the past 3 weeks, 1, 2, 3, has caused price to push lower. Now it's back effectively at the older breakout line. It'll test this level for strength. And it appears from the price and volume that some modest or minor support has been drawn out. I won't be surprised to see price come back and perhaps try to consolidate through here, just below that breakout line. It'll also depend on when the US dollar stops its surge higher and begins to consolidate in that market, and that will allow this market to recover somewhat. And that's a reoccurring theme probably amongst a lot of the charts today. That US dollar index strength has really caused some damage on some of the associated charts. Next chart is the 10-year note futures. 10-year note's been under a bit of pressure, fallen below this 17.5 level, and we're down to what I'll call last gasp previous support. There is support in this bar. This was the real level where support came in through here. There is last gasp support here. This market is trending lower. It really needs the US dollar to ease up a little bit and let it catch up. Otherwise, it really will break down. At this point, it's just holding on, but only barely. Copper price futures. Copper price futures pushed higher in the past. You can see it really stalled out at this level. This was the strength in the US dollar, and also there's some supply probably being drawn out in the background from this bar here, which corresponds to this higher volume here. So there was a good effort in these two bars here made to try to absorb the strength in the US dollar, but this market has succumbed this week and it's pushed lower, albeit on reduced but about average volume. So it's made a really decent effort to hold on, and when the US dollar begins to consolidate, I expect this market will regain some of the lost ground, but it was pretty much forced lower after 3 weeks of strength on the US dollar. Gold price futures, the breakdown line was there. There was good buying support come in at this level here. Can be seen with this higher volume here and the response there, and prices come back to this level again. So there's previous support being found around 1700, and the close slightly off this week's low on an increase in volume probably suggests that there's an attempt to support the market as well. But there's been 3 pretty strong up bars on the US dollar index futures, and here's the 3 down bars that correspond with that strength. Next chart is silver price futures, which have 2 breakdowns in the background. And this market has also come back with the strength in the US dollar. Here's the 3 bars that correspond to those up bars on the US dollar. And you can see the market is really trying to hold on at these lows. Volume was slightly reduced this week. There was an attempt the previous week to support the market. The strength in the US dollar probably caused some of those positions to be dumped this week, which is why there was an increased spread. But then in response, probably towards the end of the week, there's been some sort of buying support emerge at these previous lows. Like crude futures are threatening to break down further. Here's the support level. Twice in the recent past, there's been an attempt to consolidate in this market, and both times it's been put under pressure here and now here. It's a little bit of a strange setup at the moment. I'm not 100% sure the chart is clear right now, but price is holding on at the lows of the range. There's an attempt for this market to continue trading sideways. It is under pressure and it is threatening to break down. Aussie dollar currency futures. The important level has been the 70-cent level. It's tried to hold this level. It's found it really difficult to do so with the strength in the US dollar. And if you look, here's the strength in the US dollar. A sharp push down when it had recovered above 70 cents. A bar that tried to push higher but closed poorly. And then a down bar this week in response. And prices come back to the 68-cent level, where there has been previous support in the past. Whether that's going to be strong enough to hold this market, we'll have to wait and see. If not, there is stronger support around the 65 cents, and I expect that's probably where this market's heading in the end. Bitcoin futures. Bitcoin futures have a couple of breakdowns in the recent background, and price is holding on around the 20,000 level at the moment. I expect that there's reasonable support down to 16,000. If this market cannot hold in that range, then it's likely to go down to about 12,000. The 10 to 12,000 has pretty good support, but this 16 to 20,000 has had previous support, and the market's attempting to consolidate on top of that level. There is quite a bit of volume that's been drawn out in this recent sideways range, and that strength that's being built up for a movement There is mixed signals in this market at the moment. It does look stronger than weaker, but whichever way this market breaks, it's going to break with some vigour. There's no doubt. There is volume emerging in this market, and increased volume like this is going to give whichever way this market breaks increased strength. If this volume is all dumped, it's going to push lower with real vigour. And if there's a breakout, this volume will support the breakout. This will be strength in the background. There's mixed signals. The market is unclear at the moment. I would prefer to wait for this market to show which way it intends to break before making a firm commitment on direction. And just quickly, back to the US dollar index futures chart again, where we always finish. This market has been surging higher once again, and whenever it does so, it really does put associated markets under pressure, as you've seen. At some point, the market will consolidate, as it has done previously, and when it does that, those associated markets will get a chance to adjust, absorb, and to some extent recover from the real strength that's been shown in the US dollar recently. Okay, thanks for your time. That's my lot for the week. Hope it was worth watching. Thanks again. See ya.